stop. What if I told you the biggest opportunity in precious metals right now is showing up at the exact moment most people are getting scared out of the market? Because that is exactly where we are today. Gold just got slammed. Silver got hit too. Headlines are loud, traders are nervous, and a lot of retail investors are asking the same question. Is this the beginning of a bigger collapse? Or is this the kind of shakeout that creates the next great buying opportunity? If you are in the United States and you care about protecting your money, beating inflation, or positioning for the next big move in hard assets, then this update matters. And today, I'm not giving you a vague answer. I'm going to give you a direct call on both metals. Gold, buy or sell. Silver, buy or sell. And I'm going to base this on the latest market update available right now. As of early New York trading on March 24, 2026, gold is trading near $401 per ounce, while silver is near $69.19 per ounce. That alone tells you we are not talking about some boring sideways market. We are talking about extreme volatility, major fear, and a market where one smart decision can matter a lot. Gold price, silver price. Now here's the first thing you need to understand. Gold did not fall because gold suddenly became useless. Gold fell because the market started repricing interest rates, inflation risk, and the short-term need for cash. Reuters reported that gold on March 23 dropped to around 4,407, extending a brutal losing streak after a wave of selling tied to expectations that rates could stay higher for longer. Reuters also said gold had just suffered its worst week since 1983, which is exactly the kind of headline that scares weak hands out of a trade. And this is where most people make their mistake. They see a metal that's supposed to be a safe haven falling, and they assume the whole long-term thesis is broken. But the market does not work that way. A safe haven asset can still sell off hard in the short run when traders are forced to raise cash, when the dollar strengthens, or when the market fears central banks will keep rates elevated. That does not automatically mean the long-term reason for owning it has disappeared. In fact, Reuters also reported earlier this month that despite violent swings, many analysts still argued that the broader gold rally remains intact. One of the biggest points was that geopolitical and economic uncertainty have not gone away. Reuters also noted that BNP Paribas raised its average 2026 gold price forecast by 27% to $5,620, with a potential peak above $6,250 by the end of 2026. So let's slow down and ask the real question. If gold has dropped this hard, why are serious investors still interested? Answer number one, the Fed is not giving the market easy money right now, but it is also not solving inflation fast enough. Reuters reported on March 18th that the Federal Reserve held rates at 3.50% to 3.75%, projected higher inflation, and still pointed to just one cut this year. Powell also made it clear there is unusual uncertainty because of the current geopolitical and energy backdrop. That matters because gold usually loves lower real rates, but in the short term, it gets hurt when traders believe inflation could stay sticky and rate cuts could be delayed. Answer number two. Gold is still sitting in the middle of a long-term macro story that has not disappeared. The World Gold Council says gold still has support from stronger inflation hedging demand, growing macro uncertainty, stretched risk asset valuations, and the possibility that bonds may not diversify portfolios as effectively as people expect when stock-bond correlation changes. That is a very important point. Gold is not just a panic asset. It is also a portfolio insurance asset when traditional assumptions start breaking. Answer number three. This drop may be more about liquidation than thesis destruction. When markets get stressed, people sell what they can sell, not always what they want to sell. Profitable gold positions often become a source of liquidity. Reuters described that dynamic too. Traders taking profits, covering margin pressure, and reacting to a stronger dollar and rate fears. That's painful in the short term, but it can create reset opportunities in the medium term. So here is my call on gold today. Gold is a buy for long-term investors, but only if you respect volatility. Not a blind all-in buy, not a hype buy, not an emotional buy, a disciplined buy. If you already own gold, I do not think today is the time to panic sell into fear. If anything, this kind of brutal flush often removes leverage, resets sentiment, and gives long-term bulls a better entry zone. But if you're a short-term trader, you also have to admit the chart has been damaged by momentum selling, so chasing every bounce is dangerous. That means gold today is best treated as a defensive accumulation asset, not a quick flip. Now let's talk about silver, because this is where things get even more interesting. Silver is not just a smaller version of gold. Silver has two personalities. It is part precious metal, and it is part industrial metal. That means silver often behaves like a more emotional, more explosive cousin of gold. When things are good, silver can outperform hard. When markets get messy, silver can also get hit harder. That's why silver is not for the faint of heart. But here is why silver is exciting right now. Even after all the chaos, the structural story under silver still looks powerful. Reuters, citing the Silver Institute, said the silver market is expected to remain in a structural deficit for a sixth straight year in 2026. That means demand is still expected to exceed supply overall. Physical investment demand is projected to rise 20% to 227 million ounces, while total supply is expected to increase only 1.5% to 1.05 billion ounces. That is not a trivial data point. That means even with some softness in industrial fabrication and jewelry demand, investment demand is still strong enough to keep silver fundamentally tight. And when a market has a supply-demand deficit plus emotional price behavior, it can move very fast when sentiment turns. That is exactly why silver is dangerous for weak hands and powerful for prepared investors. Now look at today's tape. Gold has been under serious pressure, but Reuters reported that on March 23rd, spot silver rose 2.5% to 69.47, even while gold was still under heavy selling pressure. That doesn't prove silver is suddenly invincible. But it does suggest that after a major washout, silver may be trying to regain relative strength faster than gold. This is where smart money starts asking a different question. Not, is silver safe? But is silver offering better upside now that fear has already punched the market in the face? And my answer today is yes, silver has the better upside setup than gold, but it also comes with more risk. Let me explain. Gold is your cleaner safety trade. Silver is your more aggressive opportunity trade. Gold is where you go when you want protection. Silver is where you go when you want torque. Gold tends to move with macro fear, central bank expectations, and currency confidence. Silver moves with all of that, but it also reacts to industrial demand, speculation, and momentum. So, if your audience is looking for the safer, steadier precious metals message, gold is easier to explain. But if your audience wants the video that really grabs attention, silver gives you the more dramatic story. Because silver today has everything that makes a viral finance video work. It has fear, volatility, a comeback angle, a supply deficit angle, and a most people still don't get it angle. And on YouTube, that is powerful. Now let's compare gold and silver directly. If someone has $10,000 and wants exposure to precious metals today, I would not frame this as an either-or war. I would frame it as a split based on risk. For a conservative investor, gold deserves the larger share because it is the cleaner store of value asset. For a more aggressive investor, silver deserves more attention because the rebound potential can be stronger if the macro environment cools, the dollar eases, or risk appetite returns. And remember, the World Gold Council's broader 2026 outlook still leans supportive for gold if growth softens, policy becomes more accommodative, or geopolitical risk stays elevated. They also argue that while a range-bound base case is possible, softer growth and persistent global risk are more likely to support gold than undermine it. That matters for silver too, because if gold stabilizes and rate panic cools down, silver can catch a second wave from both monetary and speculative demand. But there is one big warning I want to give you. Do not confuse a good long-term setup with a safe short-term entry. Those are not the same thing. Short-term, both metals can stay wild. Reuters reported that the market has been reacting sharply to stronger dollar moves, rising treasury yields, war-related oil price shocks, and fears that inflation will stay hotter than expected. Those pressures can keep metals shaky even if the bigger long-term thesis still makes sense. So if you are making this video for a US audience, here is the message that will resonate. People are tired of spin. They do not want another fake guru saying everything is bullish forever. They want honesty. And the honest message today is this. Gold and silver both got hit. The market is still dangerous. The Fed is still a problem. Inflation is still a problem. Geopolitical risk is still real. But the sell-off has created a more interesting setup than the euphoria at the top. That is the truth. So now let me give you the clean, simple verdict your viewers will remember. Gold today. Buy, but buy like a grown-up. That means scaling in, not gambling. It means respecting that gold can still retest lower zones if the dollar spikes again or if rate fears intensify. But if your reason for owning gold is wealth protection, inflation hedging, macro uncertainty, and portfolio defense, the deeper sell-off does not destroy that case. It may actually improve the entry. The bigger problem would be buying gold emotionally after a vertical run. Today, after fear and liquidation, the setup is more rational than it was near the highs. Silver today, buy, and in my view, it is the stronger opportunity trade right now. But silver is not a calm buy, it is a conviction buy. If you buy silver, you have to accept that it can move violently. It can punish bad timing. It can overshoot both up and down. But the combination of structural market deficit, recovering physical investment demand, and rebound potential after a hard flush makes silver the metal with the bigger upside story for aggressive investors. Now, if someone watching this video asks, so should I sell anything? My answer is this. If you are a long-term believer in precious metals, I do not think this is the kind of environment where panic selling makes sense. If you are over-leveraged, if you bought too high, or if you need liquidity, then yes, risk management comes first. But for the average long-term viewer trying to decide whether this is a buy or sell moment, my answer is gold, not a sell. Silver, not a sell. Both are buys, but silver is the more aggressive buy, and that distinction matters, because not every buy is the same buy. Gold is the buy for protection. Silver is the buy for upside. Gold is the buy for uncertainty. Silver is the buy for opportunity. Gold is the buy for stability inside chaos. Silver is the buy for those who think the chaos has created a mispricing. That is the core message of this video. And if I were packaging this for maximum audience retention, I would end it like this. The crowd usually gets excited at the top and terrified at the reset, but serious investors know that the best moments are often uncomfortable. Right now, gold is bruised, silver is volatile, the headlines are messy, the Fed is still hawkish, inflation is still unresolved, and yet, that is exactly why this moment matters. Because the question is not whether the market feels comfortable, the question is whether the fear has finally created value. And today, my answer is yes. For conservative money, gold still deserves a place. For aggressive money, silver looks more attractive. For emotional traders, this market is a trap. For disciplined investors, this market may be a gift. So if you want the simplest possible takeaway from today's update, here it is. Gold, buy on weakness. Silver, buy stronger upside, higher risk. Do not panic sell quality exposure into fear. And if you want my personal view on which one has the better viral story and the better upside conversation for right now, it's silver. Because when gold crashes and silver starts showing signs of life, that is where curiosity explodes. And curiosity is what gets the click. Clarity is what keeps the viewer watching. Conviction is what gets them to subscribe. If you enjoyed this update, comment below with one word, gold or silver, and tell me which side you're on right now, buying, holding, or waiting. Because the next move in precious metals could define a lot more than just one trade. It could define how smart investors protect and grow wealth in one of the most uncertain market environments we've seen in years.